If you're on crypto Twitter as much as I am, then you've probably seen some influencers bragging about how they got in on a coin before it 10x or even 100x. But most of the time, that's not very useful for us because A, it's usually too late, and B, we don't even know if we can trust the influencer. Like, did they actually get in on that when they say they did? Or did they just make a bunch of random calls and delete the ones that went wrong? That's why it's best to ignore what the influencers say completely and instead watch what they do. This is a technique that I call whale watching. And even though it doesn't guarantee success, it sure as hell will increase your chances of finding those 100x gems. So today, I'm gonna walk you through my 6-step process to watch whales and find those promising altcoins before they rocket. Okay, so the first thing you gotta do is look for tokens that have recently pumped. Now, I'm not talking about established large cap coins like Bitcoin or Solana. No, I'm talking about newer, under the radar projects that have more potential upside. A great example of this from recent memory is EtherVista with ticker symbol VISTA. This token went on an absolute tear, and unless you were really plugged in, you probably missed it. But the signs were there if you knew where to look. In the weeks leading up to its big pump, Vista started seeing a lot of unusual activity. Trading volume was picking up, social mentions were increasing, and most importantly, some big wallets were accumulating. This is the kind of early momentum that can be a telltale sign that a big move is coming. But it's easy to miss if you're not actively looking for it. So how do we find the next Vista before it takes off? Well, once you've identified a token that has recently rocketed, the next step is to dive into the data to see who's been buying. What you want to look for are the wallets that loaded up before the price took off. But how do you do that? Well, you can use tools such as Nansen, Dex Screener, and Arkham Intelligence. They're all analytics platforms that let you track wallets across different blockchains. You can see things like their balance over time, their biggest buys and sells, and you can even label wallets to help you keep track of all the whales. So what I do is I take that token that we identified in step 1, I'd plug it into Nansen, and I'd look for wallets that were buying before the big pump happened. But here's the key, I'm not just looking for any whale, right? Like, what I'm really looking for is the smart money. You see, whales are just big holders after all. But smart money are the ones with a track record of buying low and selling high. So keep this distinction in mind because it's super important. But anyways, let's say that you found a few wallets that look promising. They bought big, they bought early, and they seem to know what they're doing. That's great, but we're not done yet. As the next step is to really dig into these wallets and analyze their track record. Like, when I look into a whale's history, I'm looking for a few key themes. First, I want to see consistency, as anyone can get lucky with 1 or 2 good trades. But the ones that are actually worth following are the ones that do it over and over again. Like, I'm looking for wallets that have a high hit rate, where the majority of their trades are profitable. Second, I'm looking at the size of their wins relative to their losses, as even the best traders have losing trades after all. But what matters is that their winners are more than enough to make up for their losers. A good way to measure this is what's called the Profit Loss Index, or PLI. It's essentially the average size of a wallet's winning trades divided by the average size of their losing trades. So of course, the higher the PLI score, the better. I'm also looking at how long they typically hold a position. Like, are they just short-term flippers or swing traders who have conviction in their buys? Now, another key factor is whether the wallet belongs to a real investor or a project insider. And one way to determine this is to look at the token amounts. If the tokens bought don't match the tokens sold, it could be an insider who received their tokens for free rather than a genuine investor. We want to focus on wallets that are buying and selling in roughly equal amounts, as this suggests real market activity. The goal here is to identify wallets that belong to real, profitable investors who have a track record of success, and skip the ones that are owned by insiders who are only profitable because they had privileged information. By focusing on these high-performing wallets, we can gain valuable insights into which tokens and projects the smart money is betting on. Now, of course, past performance is no guarantee of future results, but if I see a wallet with a long history of profitability, then I definitely want to at least follow it. Okay, so far we've covered 3 out of 6 steps for this whale watching strategy to work. But before we get to step number 4, I want to quickly share with you 3 reasons why you should try out 3commas Trading Bots, who's also the sponsor of this video. First is their DCA bot, which is super flexible and great for any market. It can automatically buy and take profit in bull markets, or sell and buy back lower during bear markets. There's even a marketplace with preset strategies, so if you don't want to customize it all yourself, then you can just copy one with a few clicks. Anyhow, second is their grid bot, which is perfect for volatile or sideways markets. It places buy and sell orders within a price range, repeating the buy low, sell high strategy. It's way more efficient than doing it manually, and it performs great during choppy markets. But third is their signal bot. This one works in any market, using your technical analysis and chart indicators to automate trades. It's fully integrated with TradingView, so you can set it up to follow your own strategy or perhaps an expert's. But anyways, if any of these sound interesting, then check out my link below for a free trial and up to 50% off your first subscription. Alright, back to whale watching. And here's the thing, let's say you've identified a promising wallet and analyzed what it's buying on one specific blockchain. Well, if you stop there, you might be missing out on other opportunities. Just think about it, right? The biggest whales aren't just playing in one little corner of the market. They're making moves all over the place. So the real alpha is found by connecting the dots across the entire crypto world. Like if I find a wallet that made a big buy on Ethereum, then I'm also going to look into what they're doing on the Binance Smart Chain, Polygon, Solana, and all other major ecosystems. But how do we do this? Well, a tool like dbank is great for this. You just punch in a wallet address and it shows you a cross-chain view of their holdings and activity. So the point is, don't limit your analysis to just one chain or one subset of the market. If you're only looking at Ethereum or Solana, then you're missing the bigger picture. Alright, so we've covered a lot of ground so far. We've talked about how to find tokens that have recently pumped, how to find the wallets that were accumulating before the pump, how to filter those down to the most promising ones, and how to expand your search across the entire crypto world. But let's be real, constantly tracking each wallet on your list can be a lot of work, and nobody wants to do that manually. Fortunately, you don't have to, as most of these analytics platforms have alert features. You can set it up so that you get a notification every time a certain wallet makes a move. That way you don't have to constantly check their wallets, you can just wait for the notification and then go analyze the trade. You can also set alerts for specific tokens. Like if you're watching Vista, for example, you can set an alert for any transaction over $100,000. That way you'll know right away if a big buyer steps in. But here's the thing, alerts are just the beginning. Theoretically, you could even set up a bot to automatically execute trades based on these whale alerts. Like whenever they buy a new token, the bot buys it for you too. But to be honest, I'm not the biggest fan of blindly copy trading whales because I think there's still a lot of value in your own judgment and analysis. That's why I recommend that when you do get a notification of a whale purchase, you should quickly dive in and do your own research. Like you should look into the token, the project, and the market conditions, and try to understand why the whale might be making this move. Then, and only then, should you pull the trigger on the trade, if you decide that it aligns with your investment strategy. Now, this brings us to perhaps the most important step of them all, risk management. Here are a few key principles that I always try to keep in mind, even when I'm watching whales and investing based on their picks. First and foremost, never invest more than you can afford to lose. I know it's a cliche, but it's true. And second, I think it's crucial to have an exit strategy for every trade. Before you enter a position, you should know when you are planning to sell. You might commit to selling when the whale starts selling, but you should also determine your own stop loss levels. And when you reach them, stick to the plan. Don't let emotions or FOMO cloud your judgment. Third, dive into the fundamentals of the project. Look at the team, the technology, and their roadmap. And ask yourself, is there any real substance here, or is it all just fluff? You should also check out the community sentiment, like what are people saying about this project on Reddit, X, or Telegram, and is there any genuine excitement, or is it all just a lot of shilling and talks of pumps? Fourth, be wary of lucky traders. Like just because a wallet hit it big once, doesn't mean they're consistently profitable. Fifth, always look at the bigger picture. If a wallet's activity seems too good to be true, then it might be. Be cautious of wallets that are tied to project insiders, as they might have access to information that the rest of us do not have, which can skew their trading results. And sixth, always keep the macro view in mind. Like in a bull market, even the worst traders can look like geniuses. But when the market turns, that's when you see who's really skilled and who is just riding the wave. So overall, whale watching is a powerful strategy to get an edge in the crypto markets, but it's not a magic bullet. It's one piece of the puzzle and one input among many that you should be considering. Oh, and by the way, if you're curious about EtherVista, which I mentioned as an example, then you should watch this video where I share my honest review about it.